Hello folks, I'm L.A. Little and this is your daily TA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves, what happened today and what does it tell us about the coming ones? Now, I do this show every day, 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. And we started to get that pullback. I talked about it last night. Members know that I was talking about it last week. We took some profits last week expecting this, and we're starting to see that fulfilled here today. Let's look at the ending numbers. A little bit of different format, breaking straight into the news. It was a suggestion by one of the members, and getting straight into the chart, so hopefully that will help. Get a little bit more time into these things instead of the music at the beginning and ending of the show. Maybe that's good, maybe that's bad, I don't know. But the one thing that was bad today was the Russell, down a full percent, 12.76 points, 1186.74. You don't want to see this guy leading on the way down. We're going to look at the charts here in a minute, but this is a no-no. This is and has been our best indicator for quite a while, and when I start seeing it fall like this, I get a little bit concerned. Elsewhere it wasn't too bad, right? You had Apple holding the NDX up. Industrials actually just down fractionally. S&P's down 0.4%. Composite lost a decent amount. And if you think about this, remember these two had been the ones bringing up the rear. Right? They were the last ones to make the move, to make the run, to come back to the top. Which ones are the first ones down? Well, it's the ones that were the weakest. That's no surprise, shouldn't be a surprise. That's the way it usually works. And so that is something to recognize. And then also that tells you that you have broad weakness. These are the broad composites. They were down more than anything else. That's telling you had broad weakness in the markets. The gold market actually was down, came back. Copper down 0.75%, silver down 0.5%. Those markets actually still look pretty strong. Bonds had a nice big up move, but it did kind of fade towards the end of the day. Oil down again, back into that support zone. And the dollar actually eked out a gain despite what looked like weakness today. So if we go over and pop in, start taking a look at these indexes to see what they look like. Let's start with the S&P 500. So the low on Friday was 1975.88. You got underneath that slightly higher volume. That tells me we're going to test into that again tomorrow. You were coming into a bar, a thrust bar up. So it looks like to me it will test it again tomorrow. Then the question is how far does it pull back? If you look at these big bars, the pullback zone that you would think on the first retrace would be where these guys line up. And if you look at them, it's right about here, so about 1163, so somewhere between, 1960 to 1964 or so. So that's where I'd look for the retrace to try to get to. And that would probably bring it back to a point where you would see the bargain hunters come back in if they can hold their breath that long. But for them, for the dipsters, it's pretty hard when the market's been this bullish to hold off. And so what you're going to see, in my expectation here, is you're going to see some sort of a pullback, which is just beginning. Maybe it comes back in this deep, and then that's where they're going to come back in. They're going to drive by this thing and run it back up, and then that's going to be the tell, right? Do you get back over the highs, the volume expand as you go to new highs if that's what happens, or do you not get back to the highs or get back to the highs and fell, right, and volume starts to expand as you come back down? Those are the signs that the market gives you. Those are the kind of tests that you have to look for. We got the expansions, right? We just missed the ABCD structure on the upside by 2 points. We can certainly go right back up there and test it and capture it. We're not that far away from it, but I suspect you're going to see some pullback first, then a pushback up there, and then that's when we'll get the tell. It tells us. And if you think about it, if it takes 4, 5, 6, 7 days, then we're going to be a little deeper into the earnings season, and we're going to get a much better tell as a result of that. If we look elsewhere, the Dow Jones doing about the same, coming back down. This one, the only thing that I would say here is that you had a breakout over 2 swing point highs, right? And if you think about it, that pullback that's starting to happen already is not something you should see. You should see this thing, remember, extend 2 to 3 bars to the upside. What's it doing? It's coming right back. What does that say? Well, that says it's weaker than it looks. And if you have something weaker than it looks on one of the highest probability trades around, and it's, I mean, this one had all the setups. It's not extended. It doesn't have overhead resistance. It has multiple breakpoints. If you take all those things in my last book that talks about the higher probability trades, they're there. Yet it can't push higher. Didn't push down very much, but it can't push higher. So to me, that's weakness, and that's a subtle sign that this thing's probably going to try to come in a little bit farther. Here's the NASDAQ composite. If you take and look at this, 43.96, you're coming into that bar strength. That looks like the ideal place for this thing to try to pull back to. The real strength of the day was in the NDX, and you can see it's still hanging at the highs. It did get over back under, but had higher volume, so that really isn't a 2-bar. Earlier today I thought it might end up that way, but I guess I wasn't. Well, actually, let me go back for a second, because Friday was a half a day. I mean, Thursday. Let me recalculate. Maybe that's why I was thinking at 20. Yeah, actually it is. Friday was about half a day. So if you take and consider Friday as double that volume, which is what we should do, then in fact it was an over-under 2-bar reversal. This thing's probably going to come back. And then we go to the Russell. And what does the Russell do? Well, the Russell comes off those highs. Remember, it made this spike high, went up. That spike high was a test of the highs. This is the weekly chart. 12.12.82. You go into it 12.13.55. You get over it. You're doing 1.3 into 1.7. Lighter volume on the weekly. It was lighter volume on the daily at the time as well. 2 more bars you hang on the holiday week, and then the profit birds start stopping out, taking their profits, moving out of the way. Going to come back in. The other thing that I don't talk about all that much, but which is an issue and one that you should always watch, is these TA today charts. They don't draw resistance and support where they think it should be. They draw it where it really is. And what I mean by really is that's the ideal place where you should get some sort of a tell. Support zones and resistance zones are supposed to be drawn in those places where, when a test occurs, it gives you information. And so as it comes back into this area, it really should find buyers at that price point. And when that is a long way away from where it is, in this case 40 points, right? That's what, 3%, a little over 3%, just to get back to an area that you should find buyers. I don't know about you, but I don't want to hang around for 3% drawdown just to find out if somebody is going to buy. I want to try to nip some of my profits up here if I'm in that position. Farther it gets away from support, more likely it is to get a bigger pull back the other way. So when I see something like that, again, another thing that makes me a little bit less likely to want to stay with the long positions. And remember, we had talked about, if you go back, we had talked about a push into July, second week of July, that's where we're at now, on a performance anxiety into the end of June, right? End of quarter, end of month. That's exactly what took place. Once it became clear back here in the late May time frame, once it became clear that was what was going to happen, you had to position for that trade. That trade's up. The ABCD structures, they're all done, right? They've all completed. They're done. They're not there anymore. I mean, yeah, there's a couple points left, like on this one, a couple points. S&P was a couple points, but for the most part, most of them are done, and those are like within, a tenth of a percent. Folks, a tenth of a percent, I'm not going to hang around for, and you shouldn't either. So when you start seeing your projections, the thesis dry up, it's time to think about doing something different, because if you don't, you're simply going to give back either some or all of what you gained. Hopefully not all. Hopefully you had some stops in, you get back out of it. But unless you're trading strictly on the intermediate term time frame, and even there you had them play out for the most part. The suggestion here is you're going to get some sideways movement. It is July, August. The best part of the summer is already over in terms of the markets. All right, so that's the indexes. If we look at the sectors are kind of telling you the same thing. With the broad weakness that we saw in most of the market, you wouldn't be surprised to see the market start trying to trade back the other way. I'm not going to go through all of these. I'm going to point out a couple that are weaker than most. XLE, the energy sector, that one's struggling, and it's probably going to continue to struggle. The other one that's really struggling is the industrials. Industrials look like they're going to try to set up another ABCD structure on the downside. This is the only one so far that has broken the bullish. Everything else is still bullish, but you're starting to see this one try to come down, and instead of being sideways, go bearish. When you start to see 1, 2, 3 sectors start to do this, pretty soon you're going to have 10 of them, right? That's the way this stuff works. So it's important to watch the signals on the first 2 or 3. We were watching, if you remember, we were watching the XLY to see if the XLY would retest and regenerate higher. Let me pull that one up here. We were watching back here, if you remember, to see that when it came back in this time frame, it was testing, doing a retest, regenerate off prior highs. And that was a critical test, if you remember. That was 2 months ago now. Because if it started to break down, we were going to see the potential for others to follow. It didn't happen. What did we do? We went the other way. Well, XLI is actually going the opposite direction right now, and has the potential to pull the others with it. The only really strong one still, XLK, volume comes in, new highs. That one is almost done now. 39.20 is the number on it, got to 39.02. So you can see there's not much left there, and almost everything else is setting up to try to drift back in. XLY, I just showed you. XLV looks that way. They all kind of look like they're going to drift back in, and a number of them look to me like they're going to come back and try to do immediate retest regens. A good example of that is the XLB, right? You break out here, you extend one day, and now you're back in there doing a retest regen. And the volume is decent all the way back in. So we'll see. These are the kinds of tests you want to look at and say, okay, do they hold or not? What happens if they don't hold? Well, if they don't hold, that says it's no longer up, but instead probably a sideways range at best, which kind of changes the whole complexion. That's, of course, why we watch it. So that's the sector story. If we look over at the ox markets, I don't know that there's any big tells here other than the fact that the dollar actually hung up there today when it looked as if it was going to try to come back in. The dollar strength, even though there's really no volume here, the dollar strength, if it continues, is going to put pressure on our markets, and if accompanied by a pullback in the FXE, which didn't happen today, we should see money try to flow to other places. FXY is the Japanese currency, got a big bounce. That's going to put pressure on the yen, on the Japanese market. This thing is still trading in a range. The FXY If it starts breaking over these swing point highs, then that's a whole different story for Japan. As long as it stays up underneath them here in this range and potentially trades back down to test the lower range, right, gets back underneath here, you know, then that Japanese market would be an interesting spot to be. Talking about the Japanese market and talking about overseas markets in general, let's pop over there. If you have a question, you can certainly type it in. When I get a chance here, I'll go to that. On another note, you can text me, 303-912-9110. You can also email support@TA Today. Again, I usually have 10-15 minutes max at the end of the show. I can take those questions, try to answer them for you. And if you don't have questions, then I'll simply talk about other things. But it is a chance for me to answer questions you may have. If we go to Europe and looking at the overseas markets, the CAC actually gets under the low today. We were just talking about the XLI. Well, here's a index in Europe breaking under it. That's going to shift the trend. Actually, it's not even going to have a 6 bar, so it's not going to be a swing point low, but you do have one back here it's going to break, and so that's going to shift the trend to bearish. And if this thing, now a big test here now will be, does this one continue lower or not? And if we look at it, the ABCD structure on this one reaches quite a way down if this thing actually starts to gyrate down. So I'll be curious to see, does this one kind of hold here and bounce back up real quick or not? This to me has been, still is, the weakest index of the major three. It's not, if I was going to invest in one, it wouldn't be that one. The DAX, on the other hand, is probably the strongest one, and the DAX went up, tested into, well, it didn't quite test the highs, left a high volume high out there, got close to it, pulls back today, and in both cases on the CACs and here, not much volume. This one's still in the larger range. Tends to get into the bottom. Got underneath it, stay underneath it. This thing can actually trade a little bit lower again tomorrow. And I would rather not see it trade back into this swing point high if I'm bullish, but it does look like it's going to come back and tag it again. FTSE's the other of the major three. FTSE's you know, in this big range. The FTSE showed some strength and has gone back to more of a sideways trend. We knew that here when we got this break underneath this low, right? There was multiple lows that had broke. There was one here and one there. So when we broke under it here and then we immediately traded back up, just like we were just talking about the Dow immediately trading back down, well, that's a pretty clear signal that more than likely this market's going to try to trade back up, and that's what it did. And as part of doing that, it broke back over the retest region but couldn't quite get over it, right? Then it comes down, test again. Now it actually gets over it. That tells me this thing's in a big range. It's probably going to stay in it. It's probably not going to trade to the, you know, it's not going to break down more than likely, and it's probably not going to break out yet. It's going to range trade for a while and eventually make a move one way or the other. If we go over to Asia, the Hong Kong and H shares, the Chinese shares, they're actually getting a little bit of a pullback. They may get a little bit more today, but this looks like it's just going to attack those highs before it's done. And the Hong Kong has already attacked and got over the highs. It looks like a retest region may be coming in tonight. They don't look to try to come back very far. You can see anchored support right up there with them. I would expect these two both to stay reasonably strong. They're trying to. The Nikkei, like we just talked about, still strong, but the yen being strong is probably going to put pressure on it tonight. Taipei still strong, hanging at the highs. Another market that was kind of interesting is, or has been interesting, is the overseas all ordinaries, the Australian market. This thing has a big range, and it just keeps bouncing between, you know, both extremes of it. Another big push straight back to the top. Looks like it's going to fail here, probably down tonight as a result. And what was the other one there? Oh, the Toronto Exchange. My friends in Toronto, this looks like this one. Let me get Toronto up. Toronto looks like it's actually going to try to come back in a little bit more. So it's probably made its big run at this point. Let me see what kind of questions we got, and then I'll come back to anything else. And let's see here. So first question has to do with NBMS. So let me get some quotes up here. So NBMS, and Boeing is the other one. And Boeing we've been looking at, so that one will be interesting. So let's start with the first question. Okay, so Neostream or Neostem. So I'm not familiar with this, but I can tell it's a biotech. And let me see, what is the question here? So the question is, it broke below support on the 627, 630. Okay. And after 28 bars with a huge volume support. Okay. So what is being talked about is the breakout was here over this swing point high. Never has tested. Now you go 28 bars across, and now you're back into this retest regenerate zone. So that's kind of the setup that's being talked about. Do you think it will regenerate from here or keep going down to the 565 area, which is the next support? So you can tell this is a member because he's calling out support based on TA charts, I believe. And if we go back in here, the area that he's wondering about is, does it come all the way back to here? Okay, so the first thing is, did we get a clean test of the bottom? We did, so that's a good thing. So that doesn't mean, it kind of suggests to me that it's probably not going to come back that deep. It doesn't have a reason to. Now we get a push up here. Volume was light all along. Then you get this big spike here on this bar. So that's not a good thing. Now you're underneath it. You're into the retest regen zone. You've gone more than 28 bars. Or you've gone more than 6 bars, 28 in this case. And will it generate lower? Well, it looks to me like, and we'll look at the weekly next, the low here is 596. And that low is 590, 433, 170. You're coming in with 357, and you had huge volume here, 3.3 million. From what you're asking me, it sounds like you want to buy it, and if you're going to buy it, you have to respect this bar. So this 627 bar with a huge volume. So that tells me that you can't buy it unless you get a test of the full retest regen. And so I would force it to test that low and see if it's going to break it or not, and does volume just totally dry up there or not. And the reason I'm saying that, and I'm going to take all this off and draw 2 other things. The reason I'm saying that is the top of this bar, which had decent volume but was a wide price spread bar, really is the bottom of that retest regen zone, right? They come in at the same price point. And so that's the bar that's going to try to hold it up, 592. So I want a test of that bar, because that one will tell me if it's going to get deeper. And if it gets into that bar, then yeah, it's certainly going to come test into the top of this one. So I'd force it to retest into that bar. That would be where I'd try to buy it, because I've got to respect this and know that I may have to just jump back out up there at 630 on that test, because that, especially if we test into this low, which I think is probable, that 40 cents back up, that's probably going to be a tough spot to get back over, and you want to be able to make that percentage gain back up and be able to get out if you need to. So I'd force it to test lower. Let's see what the weekly looks like. Get these off. And yeah, and the only bad thing here is that also makes me want to do the same thing. There's 2 more elements in play. One is the trend here is different. It's sideways, and so the trend here is not nearly as bullish looking as what we just saw. And you've had a series of highs that have been lower, and you're fixing to print another one that looks like on a weekly. And this thing is a high volume wide price spread bar with no test on the weekly. So if you get into this and stay into it, which we're starting to get into now, then all of a sudden this becomes your range. So I definitely would make it test lower, and if I were going to buy it, you know, I would force it to test into that this bar here. That's your May 19th bar, and then I would be looking to flip it, you know, if it can't get back over this on the first push. All right, next question. So BA didn't break down. Now BA was a Boeing. We had talked about a potential breakdown, and so let me see. So the breakdown more we talked about, but it's testing the SPLO. It broke. So the swing point low. So what's being said here is, remember, we broke 2 swing point lows on this high volume, and it probably is a wide price spread bar too, you know, given what I see on the chart. So what's that going to do? That's going to set up a retest, regenerate, right, back into this area. We're starting to get into it now. Let's see what our volumes are. We got 3.16. The breakdown bar's got 7, so almost twice. And the swing point low itself has 2.9. And this other one had 2.9. So really the test is back on the breakdown bar. 1, 2, 3, 4, 5, 6. This is the 7th bar. Yeah, I would wait. I would wait because I believe, well, actually, let's look at this. 126.28, 1626. Okay, so this is interesting. So you get a high volume low, wide price spread bar. You get underneath it, less volume, still heavy volume, less volume though. Now you're popping back up. You know, the way this looks to me, you definitely, even though it's more than 6 bars, it's the 7th bar. You definitely can test back up into here, but it still looks to me like you're gonna come back down here again. Let me see what the weekly looks like at this point. Oh yeah, this one also tested. That was the other piece of it. Yeah, this one's probably gonna bounce higher, and then it's gonna test back in. So 131 is the resistance on the weekly. See, it broke into the 2 big bars. This is huge anchor support. It's going to take a lot to break this down on the weekly, right? So you test into it a couple of weeks. Volume's decent, but not huge. Now you're getting your bounce. And if we go back to the weekly now, 131 is back up here, top of this zone, and the top of your 131.10. Yeah, this one's going to test back right up to here, and that's probably where it's going to fail. So I still don't see a trade in it. You'll want to let it come down and test down here one more time, and if it can't break it down the next time, and if earnings season's going pretty well, you know, then you can get another push back up. So you're just going to have to be patient, let it test, fail, come back down and do it again. And the next time down, if it holds, that'll give you a better chance to actually get long based on those weekly charts telling you the strength is there, there's enough buyers at that price point. And then at that point, you've tested, you know, because play it out and think about it. Now you've done the full retest regen. Now you come back down, you can't break down. What does that do? That increases your odds that you're going to get over it on the way back up, which gives you a much better reward to risk if you make the trade, because you can put your stops in tight and you're shooting for even higher potentially on the move back up, maybe to this swing point high at least. So that's the way you have to trade it. You just have to keep watching it and wait for it. Wow, out of time. I did a little bit more analysis than usual there, but I guess that's good. It's good to kind of delve into it every now and then. Okay, so we have a bit of a retrace starting to take place, right? That retrace, I suspect you're going to find buyers somewhere after a small retrace. Can it get another 7, 8, 10 points on the S&P? Sure. May it turn around and go straight back up? Yeah, good, right? Because you've had a bullish trend. It only takes one news item to get the bulls all, you know, foaming at the mouth again. So, you know, knowing that, It's not a place to go willy-nilly short, but it's certainly not a place to start trying to load up on longs. The best thing to do here is to either protect those profits that you have, you know, at least some of them, especially the ones that you're trading versus longer term, and maybe take some of them out at favorable prices if given a chance. Folks, thanks for joining me. Have a great night. Appreciate you being there. You take care. Tell a friend, tell two. I'm LA, and this is and was your daily TA wrap. Have a great night, and I'll see you next time. Good night, folks.